My new manager canceled my call with our tax attorney. We're not paying $400 an hour for that. I calmly logged off and said, okay. But the IRS didn't match his confidence. When the letter arrived with back taxes and penalties stacked up, his hands-down decision turned into hands-shaking panic. All right, so picture this. I'm sitting at my desk, doing my actual job, when my boss walks over and cancels the single, most important phone call of the quarter with a click of his mouse and a smirk on his face. The call. With our tax attorney. The reason? $400 felt too expensive. The result? Well, let me just say the IRS doesn't really care about budget meetings or how confident you sound when you're making terrible decisions. Let me rewind and give you the full picture of how spectacularly this went wrong. My name's Marcus, I'm 31, and I'm a senior tax compliance specialist at a mid-sized distribution company called Northbridge Supply. That's fancy speak for I'm the person who makes sure we don't accidentally commit tax fraud. I'd been doing this for 3 years, and I was good at it. Really good. The kind of good where I built every report the executives presented to the board, even though my name never appeared on the slides. The kind of good where I could spot a payroll discrepancy in a spreadsheet with 2,000 rows in under 10 minutes. I wasn't some junior analyst fresh out of college. I had my CPA. I had experience at 2 other firms before this. I knew tax law, employment regulations, and the exact difference between a fixable mistake and the kind of error that gets you audited for the next 5 years. Our previous controller, Helen, had one rule she drilled into everyone from day one. If the IRS so much as sneezes in our direction, the tax attorney reviews it before we respond. It wasn't paranoia. It was survival. See, we were a disaster on paper. We had contractors spread across 3 states, some of whom probably should have been classified as employees, but nobody wanted to deal with the reclassification paperwork. We had remote employees in 2 more states where we'd registered for some taxes, but not others. We sold products in states where we'd never bothered to register properly for sales tax, which meant we were technically operating illegally in about 6 different jurisdictions. And we had this charming habit of marking problems as fix later in our internal system, which somehow always translated to never actually fix unless someone threatens us. Helen understood that we were walking a tightrope. She kept meticulous records. She made sure every filing was double-checked. And most importantly, she had our tax attorney, Richard Pemberton, on retainer. Richard wasn't cheap. $400 an hour. But he was worth every cent because he kept us out of trouble. 2 years before I started, the company had been flagged for late payroll deposits. Nothing catastrophic at first glance. Just a pattern of deposits hitting the IRS a day or 2 late over the course of 6 months. But the IRS doesn't like patterns. Patterns suggest intention. Patterns suggest you might be using their money as a short-term loan. Helen had navigated that situation carefully. She'd cooperated fully. She'd provided documentation showing that it was a procedural issue with our old payroll software, not intentional fraud. She'd worked with Richard to draft responses that were professional, compliant, and apologetic in exactly the right way. By the time I arrived, things were calm, stable, under control. But here's the thing nobody tells you about the IRS. They have long memories. We weren't officially on probation or anything like that, but we were on what I privately called the mental watch list. The kind of company where if something else went wrong, they wouldn't give us the benefit of the doubt. They'd assume we were back to our old tricks and come down hard. Helen knew this. She treated every interaction with the IRS like we were defusing a bomb. Slow, careful, professional. Then Helen retired. She left in May, right after her 65th birthday. There was a cake in the break room. She gave a short speech about how she'd enjoyed her time here, but was ready to spend more time with her grandkids. She shook everyone's hands. She packed up her office over the course of a week, labeling boxes and making sure her replacement would have everything organized. That replacement was supposed to be me. At least, that's what Helen had recommended. She'd spent 6 months training me on everything. The systems, the relationships, the history, the landmines. She'd written a 70-page transition document that covered every quirk of our tax structure and every contact we might need. But corporate had other ideas. They wanted to bring in someone from outside, someone with fresh eyes and modern cost management experience. What they meant was someone who would cut expenses and make the balance sheet look better for the investors. So they hired Derek. Derek walked in on a Monday morning in June with a new title, a laptop full of PowerPoint presentations, and a voice loud enough to be heard 3 cubicles over. He was maybe 35, with the kind of confidence that comes from thinking you understand everything after reading a few business books. He called himself a cost optimization specialist. Everyone else started calling him the budget slasher after about a week. His first day, he held an all-hands meeting. He stood at the front of the room with his arms crossed and told us that the company had been bleeding money on unnecessary overhead, and that his job was to bring financial discipline to departments that had gotten comfortable. He looked directly at me when he said that last part. Within his first week, he'd cut the premium coffee service and replaced it with the cheapest bulk brand he could find. He'd downgraded our document management software to a free version that crashed twice a day. He'd eliminated the annual team lunch budget. He'd even tried to cancel our cleaning service until HR pointed out that having trash piling up in the offices was probably a health code violation. But his biggest target was what he called consultant spending. In his second week, he called a meeting with all the department heads and pulled up our monthly expenses on the projector. He scrolled down to a section labeled Professional Services and tapped the screen with his pen. $400 an hour for phone calls with a tax attorney. He looked around the room like he expected applause. Are we running a law firm or a distribution company? You people have accountants on staff. You have TurboTax. You have Google. You don't need to pay a lawyer to tell you how to file taxes. One of the VPs, Janet, tried to explain. Richard handles complex compliance issues. We're in multiple states with different. I've worked with 3 different companies, Derek interrupted. None of them needed a lawyer on retainer just to file quarterly taxes. This is exactly the kind of wasteful spending that's been holding us back. I should have known right then, but I stayed quiet. I figured he'd learn. I figured once he saw how complicated our structure actually was, he'd understand why we needed professional help. He didn't. Instead, he sent out a memo the next day. All non-essential professional services were to be pre-approved by him personally. That included Richard. If we wanted to call our tax attorney, we had to submit a written justification first, and Derek would decide if it was worth the cost. I went to his office that afternoon. Derek, I need to talk to you about the tax attorney policy, I said. He didn't look up from his computer. What about it? We have a complex structure, multiple states, contractor classifications that are borderline. We're technically still under informal review from an issue 2 years ago. Having Richard available isn't a luxury. It's protection. Now he looked up. Marcus, right? Yes. Marcus, I appreciate your concern. But I've reviewed our tax filings. They're straightforward. You're a CPA. You can handle routine questions. If something truly complex comes up, we'll deal with it then. But we're not paying $400 an hour for routine maintenance. It's not routine maintenance, I said carefully. It's risk management. Then manage the risk yourself. That's what you're paid for. I left his office knowing exactly how this was going to end. Not the specifics, but the general shape of it. Derek was the kind of manager who confused confidence with competence. He thought that because he'd worked at other companies, he understood our company. He thought that because he'd read some articles about cutting costs, he knew which costs were actually necessary. He thought saving money today was more important than avoiding disasters tomorrow. Here's what Derek didn't know, because he never bothered to read Helen's transition document. We weren't just some normal company with straightforward books. We were still technically under observation. The IRS hadn't formally closed that old payroll issue. They'd just gone quiet. Helen used to say, when the IRS goes quiet, you stay perfect. It was like living next to a sleeping bear. You don't poke it. You don't make sudden moves. You just keep everything clean and hope it stays asleep. But Derek didn't know about the bear, and he was about to poke it with a stick. The first sign of trouble came 3 months after Derek arrived. It was a Tuesday morning in September. I was reviewing our quarterly payroll reports when I noticed something odd. Our unemployment tax deposits for one of our remote workers in Colorado weren't matching what we'd reported on our federal filings. It was a small discrepancy, maybe $800, but it was there. I flagged it. I sent it to Derek with a note. Found a mismatch. Should I reach out to Richard for guidance on how to correct this? His response came back in less than 5 minutes. Just file an amended form. No need to involve outside counsel for minor clerical issues. I stared at that email for a long time. Then I did what he asked. I filed the amended form. I documented everything. And I kept a copy of his email telling me to handle it myself. 2 weeks later, I got a notice in my email inbox. Not a big red alert. Just a standard IRS correspondence. Subject line: Information mismatch. Payroll reconciliation required. I opened it. My stomach dropped. The IRS had flagged not just the Colorado issue I'd found, but 3 other discrepancies I hadn't caught yet. Worker classifications in Texas. Late deposits in Oregon. A mismatch between our W-2s and our 941 forms that suggested we'd either underreported wages or overpaid taxes, and they wanted to know which. This wasn't a simple fix. This was the kind of thing that could spiral into an audit if handled wrong. The kind of thing Helen would have immediately sent to Richard. I read through the notice twice. Then I checked our internal records. Sure enough, there were discrepancies between what we'd reported and what the IRS had on file for the past 18 months. Nothing massive, but enough to matter. The kind of thing that, in isolation, might get resolved with a phone call and some paperwork. But combined with our history, it could turn into a much bigger problem. I did what I'd been trained to do. I opened our attorney contact list and scheduled a call with Richard for the following Thursday. 15 minutes. For $100. Standard procedure. I sent Derek a calendar invite and a brief email. Received IRS notice regarding payroll reconciliation. Multiple discrepancies identified. Scheduled consultation with Richard Pemberton to ensure proper response. See attached notice. I attached the IRS letter as a PDF. That was Tuesday afternoon. I didn't hear back from Derek on Tuesday. Or Wednesday. I figured he was reviewing the notice and would have questions before the call. Thursday morning, 15 minutes before the scheduled call with Richard, Derek appeared at my desk. He wasn't just standing there. He was looming. His arms were crossed, and his jaw was tight, and he had that look that managers get when they think someone is trying to go around them. Who scheduled this call? He asked, tapping his phone screen where the calendar invite was pulled up. I did, I said calmly. We received an IRS notice about payroll discrepancies across multiple states. I need to make sure we respond correctly and don't trigger an audit. We're not paying $400 for someone to read a letter and tell us what we already know. His voice was getting louder. Other people in the office were starting to glance over. You're a CPA, Marcus. You know how to file amended forms. You know how to respond to basic notices. This isn't a basic notice, I said. It's flagging multiple issues across multiple states. We have history with the IRS. If we respond incorrectly, we could be looking at a full employment tax audit, which would cost us a lot more than $400. Or, Derek said, we could handle it in-house like adults and not waste money every time we get a piece of mail. He pulled out his phone, opened the calendar invite, and before I could say another word, he tapped the screen. The meeting disappeared. There, he said. Canceled. I'll draft the response myself, and you can review it. We don't need a lawyer for this. Then he looked around at the other people who were now openly watching and raised his voice just a little more. Accountants love to create drama out of routine paperwork. It's just a notice, people. Not a summons. Not an arrest warrant. Just a letter asking us to clarify some numbers. Marcus here wanted to spend $400 to have someone read it out loud to us. A couple people chuckled nervously. I felt my face get hot. Derek walked away. He went back to his office. The door closed. I sat there for a moment. I looked at my computer screen. I looked at the now empty calendar slot where the call with Richard had been. I thought about forwarding Derek the section of Helen's transition document that specifically addressed why we maintain attorney access for IRS correspondence. I thought about going to HR. I thought about escalating to Janet. Then I thought about something else. I thought about how my name was on most of our tax filings. I thought about how the IRS doesn't just go after companies when things go wrong. They go after individuals. They look at who had knowledge, who had control, who signed what. I thought about a conversation I'd had with Helen during my second week. We'd been talking about a minor filing error from before my time, and she'd said something that stuck with me. If you know something is wrong, and you put your name on it anyway, your signature can make you personally liable. Protect the company, yes, but protect yourself first. I reached over. I closed the files on my screen. I logged out of my computer. Then I looked at Derek's office door and said, very quietly, just to myself, okay. Not, okay, I'll fix it. Not, okay, you're right. Just, okay. I'm done trying to save someone who would gladly throw me in front of an audit to save $400. I wasn't going to argue with him. I wasn't going to send more emails that he'd ignore. I wasn't going to keep fighting for a company that had chosen him over Helen's experience and my expertise. I was going to protect myself. That evening, I sat in my apartment with my laptop and a legal pad, and I made a plan. First, I wrote an email. I took my time with it. I kept it short, factual, professional, no emotion, no accusations, just a clear statement of what had happened and what I was requesting as a result. The email went to Derek and CC'd HR and Janet. The message was simple. Per our conversation this morning, I recommended consulting our tax attorney, Richard Pemberton, regarding the IRS notice dated September 12th concerning payroll reconciliation discrepancies across multiple states. Management declined this consultation. Given the complexity of the issues raised and the company's prior history with IRS review, I am formally requesting to be removed as the final approver on any filings, responses, or documentation related to this matter. I do not feel comfortable signing off on anything connected to this notice without professional legal review. All relevant documentation has been provided to management. Please confirm receipt of this request. I read it 3 times. I checked for typos. Then I sent it. The timestamp was 7:47 p.m. Within 2 minutes, my phone buzzed. It was Janet. "Can we talk tomorrow?" her text said. "Of course," I replied. But I knew she wasn't going to overrule Derek. He was the new cost-cutting hero. I was the paranoid accountant who wanted to waste money on lawyers. Second, I went into our document management system and started downloading files. I pulled everything related to our payroll tax history for the past 3 years. Every quarterly filing, every deposit record, every correspondence with the IRS, every internal memo from Helen flagging potential issues, every email where I'd raised concerns. I created a folder on my personal external hard drive. I labeled it with the date. I backed it up to a secure cloud service that only I had access to. I wasn't stealing company secrets. I was preserving evidence. Third, I opened a browser in private mode and navigated to the IRS website. I'd heard about the whistleblower office in my CPA courses. It was usually taught as a cautionary tale, something that existed to catch big fraud cases. But as I read through the information, I realized it applied to smaller situations too. Situations where someone inside a company knew about tax violations and tried to fix them, but got shut down. There was a form, a structured submission process. I didn't fill it out that night. I just read through the requirements. I wanted to understand exactly what I would need to provide if I decided to go that route. What I learned was this. The IRS takes whistleblower reports seriously when they're well documented, when they show a pattern of problems, when they demonstrate that the company had knowledge and chose not to act. I had all of that. I saved the link. Then I opened my resume and started updating it. I worked until almost midnight. I added my recent projects. I updated my skills section. I drafted a cover letter template that emphasized my commitment to compliance and risk management. By the time I went to bed, I had a plan. Not a revenge plan. A protection plan. If Derek wanted to handle the IRS himself, fine. But I was going to make sure that when it went wrong, there was no possible way it could come back on me. The next morning, I met with Janet in her office. She closed the door and sat across from me with a concerned expression. "Derek forwarded me your email," she said. "Okay. He's not happy." "I'm not trying to make him unhappy," I said. "I'm trying to protect myself." We received a serious notice from the IRS. I recommended professional consultation. He declined. "I don't want my name associated with the response." "He thinks you're overreacting." "Maybe I am," I said. "But if I'm right, and we handle this wrong, the IRS isn't going to care about his budget goals. They're going to look at signatures and ask who knew what and when." Janet sighed. "I'll talk to him. But Marcus, you need to understand that Derek was brought in to cut costs. That's his mandate from corporate. He's not trying to put us at risk. He just sees things differently than Helen did." "I understand," I said. "But my request stands. I won't approve anything related to this notice without legal review." She nodded slowly. "I'll make a note of it." I left her office knowing nothing was going to change. Derek had his mandate. I had my boundary. The next week, Derek drafted a response to the IRS himself. He sent it to me for review. It was 3 paragraphs long. It basically said that the discrepancies were clerical errors, that we'd corrected them, and that we'd be more careful in the future. It didn't address the specific issues the IRS had raised. It didn't provide the documentation they'd requested. It didn't acknowledge our prior history. It was the kind of response that might work for a first-time mistake at a small company with no track record. We were not that company. I sent it back with detailed notes about what was missing. Derek ignored most of them. He submitted a version that was maybe 10% better than his original draft. 2 weeks later, I got a forwarded email from Derek. It was from the IRS. Subject line, additional information required. They weren't satisfied with the response. They wanted detailed breakdowns of our worker classifications. They wanted 3 years of payroll deposit records. They wanted explanations for specific discrepancies. This was the IRS equivalent of saying, "We don't believe you. Prove it." Derek forwarded it to me with a one-line message. "Pull together the records they're requesting." I replied, "Per my previous email, I've requested to be removed from approval authority on this matter. I can compile the records, but I won't sign off on any submissions without legal review." His response, "Just get me the files, Marcus. I don't need your signature." So I did what he asked. I pulled together every record the IRS had requested. I organized it by state, by quarter, by type. I created a detailed index. It took me 3 days. When I sent it to Derek, I included one line at the bottom of my email. All requested documentation attached. Recommend professional review before submission to ensure compliance with IRS requirements. He didn't respond. 3 days later, he submitted everything to the IRS. Without having it reviewed. Without checking if the format was correct. Without verifying that the narratives matched the numbers. I knew because he forwarded me the confirmation email from the IRS showing that they'd received his submission. I saved that email too. And then I made a decision. That evening, I went back to the IRS Whistleblower Office website. I filled out the form. I wrote a detailed, structured report. I didn't rant. I didn't exaggerate. I just laid out the facts. The company had a history of late payroll deposits going back 3 years. We had multiple workers who were classified as contractors, but should have been employees under IRS guidelines. We had unpaid unemployment taxes in 2 states that we'd been quietly ignoring. We had received an official IRS notice requiring professional attention. Management had refused to consult with legal counsel despite being advised multiple times that this was high risk. Management had submitted responses to the IRS without professional review. I, as the senior tax compliance specialist, had attempted to address these issues internally and had been overruled. I included dates, names, document references. I uploaded supporting files, the IRS notices, Derek's emails declining attorney consultation, my emails recommending it, the internal memos from Helen warning about our status. I submitted it at 9:23 p.m. on a Wednesday. Then I went to bed. The next morning, I started applying for jobs. For the next 2 months, nothing seemed to change on the surface. Derek kept walking around the office like he'd successfully defended the company from wasteful spending. He kept talking about his wins in meetings. He kept showing off that watch. I kept my head down. I did my job. I answered emails. I ran reports. I attended meetings. But I was also interviewing. I had 3 phone screens in the first 2 weeks. I had 2 in-person interviews in the next month. I got 2 offers. I accepted one. A senior compliance manager position at a logistics company 20 minutes from my apartment. Better title, 20% higher salary. A boss who'd spent 15 years in tax law before moving into corporate work. I gave Northbridge my 2 weeks notice on a Tuesday. Derek called me into his office. "You're leaving?" he said. "Yes." "Why?" I could have told him the truth. I could have said that I didn't want to work for someone who thought budget cuts were more important than legal compliance. I could have said that I'd lost all confidence in his judgment. Instead, I said, "Better opportunity." He nodded slowly. "Well, we'll miss your attention to detail." "Thank you," I said. "Do you think you could train your replacement before you go?" "I'll document everything I can," I said. But honestly, Derek, most of what I do is risk assessment and relationship management with external counsel. If your goal is to reduce consultant spending, you probably don't need someone at my level. You can hire a junior analyst for half my salary. He seemed to like that idea. I spent my last 2 weeks writing documentation. Clean, detailed, professional. I organized every file. I created process guides. I sent exit interview notes to HR outlining the current tax issues and recommending that they re-engage Richard Pemberton. On my last day, I packed up my desk. I said goodbye to the people I'd liked working with. I walked past Derek's office. The door was open. He was on a call. He gave me a brief wave. I nodded back. I drove home feeling lighter than I'd felt in months. 3 weeks after I left, the envelope arrived at Northbridge. I only found out about it later, through a former colleague who texted me out of the blue. Did you hear what happened? She asked. No. What? IRS sent a massive letter. Derek's freaking out. I didn't respond right away. Want to get coffee? I typed. We met the next day. She told me everything. The envelope had been thick, heavy, certified mail. The return address, Internal Revenue Service, Examination Division, Employment Tax. Derek had taken it into the conference room. He'd been in there for 20 minutes. When he came out, his face was pale. He'd called an emergency meeting with Janet and the CFO. He'd closed the door. People could hear raised voices, but couldn't make out words. By the end of the day, the rumor was that the company was facing a huge penalty. Something about back taxes. Something about willful negligence. Do you know anything about this? My former colleague asked. I shook my head. I left before all this happened. Right? Yeah. Lucky timing. Lucky, I agreed. What I didn't tell her was that I knew exactly what was in that letter. Because 2 days after she texted me, I got my own letter. This one came to my home address. It was from the IRS whistleblower office. It was a notification. Not a reward, not yet. Just an acknowledgement that my submission had been reviewed, found credible, and forwarded to the appropriate examination division. It said that if the IRS collected based on the information I'd provided, I would be eligible for an award calculated as a percentage of the amount recovered. The letter was polite, professional, bureaucratic. I read it 3 times. Then I filed it in a folder labeled Personal Tax Documents and went back to my normal evening. 3 months later, my former colleague texted me again. Derek got fired. What happened? I asked. Not sure of all the details. But apparently the IRS thing got way worse. They're saying he personally might owe money. Something about trust fund penalties? It's a whole mess. Company hired a crisis management firm. Everyone's stressed. I replied with a neutral, wow, that's intense. What I wanted to say was, he canceled a $400 phone call and thought he was being smart. But I didn't. 6 months after I'd left Northbridge, I got another letter from the IRS. This one was different. It was a detailed accounting. The IRS had assessed Northbridge for 3 years of back payroll taxes. They'd added penalties for late deposits, penalties for worker misclassification, and interest on everything. The total came to just over $2 million. But the letter wasn't just about the company. It explained that because certain violations involved willful disregard of known requirements, they were pursuing trust fund recovery penalties against responsible individuals. In tax law, a trust fund recovery penalty is what the IRS uses when a company fails to pay employment taxes. They can hold individuals personally liable if those individuals had authority, knowledge, and willfully chose not to pay. Derek met every single criterion. He had authority. He was the controller. He had knowledge. He'd been sent the notices. He'd been warned. He'd willfully chosen to proceed without professional guidance. The letter didn't name Derek specifically, but it outlined that an individual matching his role and timeline was being assessed personally for a significant portion of the penalties. And then, at the bottom of the page, there was a calculation. Based on the information I'd provided and the amount the IRS had assessed, I was being awarded 18% of the collected penalties. The exact number was redacted pending final collection, but the estimated range was between $180,000 and $240,000. I sat in my kitchen and stared at that letter for a long time. I hadn't done this for money. I'd done it to protect myself, to make sure that when Derek's arrogance inevitably caught up with him, I wouldn't be caught in the blast radius. But the money was real, and it was coming because the IRS had decided that my information was credible, detailed, and had led directly to a successful enforcement action. I called a tax attorney, not Richard, someone I'd found independently. I wanted to make sure I understood my obligations around the whistleblower award, how it would be taxed, and whether there were any risks I needed to manage. She reviewed everything. She told me I'd done everything correctly. The award was legitimate. It would be taxed as ordinary income. And no, Northbridge couldn't sue me for reporting factual information to the IRS. You're in the clear, she said. Congratulations. It didn't feel like congratulations. It felt like relief. Over the next year, I heard bits and pieces about what happened to Derek. He'd been fired from Northbridge within a month of the IRS assessment. He'd tried to claim he didn't know the issues were serious, that he'd relied on his staff. But the email trail told a different story. My email specifically recommending legal consultation. His response canceling the call and calling it unnecessary drama. The IRS didn't care about his excuses. They pursued the trust fund recovery penalty. They froze some of his assets. He hired lawyers, expensive ones, but there wasn't much they could do. He'd signed the documents. He'd made the decisions. The paper trail was clear. I heard through the network that he'd ended up taking a job at a small nonprofit doing basic bookkeeping. A massive step down from controller of a mid-sized distribution company. I heard his wife had left him. I heard he'd had to sell his house. I didn't take pleasure in any of it. I just noted it and moved on. As for me, I settled into my new job. My boss, Catherine, actually listened when I raised concerns. She asked questions. She wanted to understand the risks. When I recommended bringing an outside counsel for a tricky multi-state registration issue, she approved it without hesitation. How much will it cost? She asked. Probably $2,000 for the initial consultation and filings, I said. And how much will it cost if we mess it up? Could be tens of thousands in penalties, plus potential criminal referral if we're operating without proper registration. Then $2,000 sounds reasonable, she said. It was that simple. Someone who understood that compliance wasn't overhead. It was insurance. I got the first payment from the IRS Whistleblower Award 14 months after I'd submitted the report. It was $87,000 after taxes. The letter said additional payments would follow as the IRS continued collection efforts against both the company and the responsible individual. I didn't buy anything flashy. I paid off my student loans. I put a down payment on a small condo. I invested the rest. I saw Derek once, about 2 years after everything went down. I was at a hardware store picking up supplies for a bathroom repair. I was in the checkout line when I heard a familiar voice behind me. I can price check that for you. I turned. He was wearing a red vest with a store name tag. His hair was grayer than I remembered. He looked tired. Older. Our eyes met. He recognized me immediately. His face went through several expressions in quick succession. Surprise. Embarrassment. Something that might have been anger. I nodded. Thanks, but I'm all set. He didn't say anything else. I paid for my stuff and left. I didn't gloat. I didn't say, I told you so. I didn't mention the IRS or the Whistleblower Award or any of it. There was nothing to say. He'd made his choices. He'd canceled a $400 phone call because he thought he knew better than everyone else. That single decision had started a chain reaction that cost him his career, his savings, and years of his life. I'd made my choices too. I'd documented everything. I'd protected myself. I'd reported what I knew to the appropriate authorities. I'd walked away when I realized I couldn't fix the situation from the inside. And when the IRS came knocking, I was standing on solid ground while he was scrambling to explain decisions he couldn't defend. The final whistleblower payment came 3 years after my initial report. Another $103,000. The letter said the case was now closed. Total collected from Northbridge and responsible individuals, $2.1 million. Total award to me, $190,000 after taxes. I read the letter. I filed it. I went back to my normal day. Because that's the thing about compliance work. It's not dramatic. It's not flashy. It's about doing things correctly, consistently, even when someone tells you you're being overly cautious. It's about understanding that the rules exist for a reason. It's about protecting yourself when the people in charge decide that rules don't apply to them. I still work at the logistics company. I got promoted to Director of Tax Compliance last year. I still recommend bringing an outside counsel when we're dealing with complex issues. My recommendations are still approved. I live in my condo. It's small, but it's mine. I have a girlfriend now. We're talking about moving in together. I have a good relationship with my team at work. I play basketball on weekends. My life is quiet, stable, drama-free, and I'm okay with that. Because I learned something important from the Derek situation. When someone in power makes a reckless decision and dismisses your expertise, you have two choices. You can stay quiet, keep your head down, and hope their mistake doesn't bury you too. Or you can protect yourself with documentation, facts, and the systems designed to enforce accountability. I chose the second option. Derek canceled a call. I canceled my obligation to go down with his ship. He thought saving $400 made him a hero. Instead, that one click cost him everything. His job, his savings, his reputation, his future, and the quiet accountant he'd dismissed as overly dramatic, the one he'd mocked in front of the whole office. I was the only reason the fallout didn't destroy me too. I documented. I warned. I protected myself. And when the system finally caught up with his arrogance, I walked away clean. That's the twist he never saw coming. The person he thought he could ignore was the person who made sure he faced the consequences alone. I don't regret it. Not for a second. Because at the end of the day, I can sleep soundly knowing I did my job correctly. I raised the concerns. I recommended the right course of action. And when I was overruled, I made sure there was no way his mistakes could become my liability. He wanted to be a cost-cutting hero. He ended up being a cautionary tale. And I'm fine with that.